What's up, traders? This is Adam at Swiss Made Trades. Looking at the chart for ES, just want to go over a recap for today and kind of give some context where that leaves us for the upcoming week. Into the open, we saw controlled buying, and I said this in the chat room. What I mean by controlled buying is this very methodical move forward, a bit off this bounce off this trend line. And we also saw this going to Thursday's open as well as Wednesday's open. And the result of that was, or the conclusion of those was that this was just short covering, and then that was confirmed because we just got smacked right back down. So this sort of controlled buying into the open after such a long downtrend, to me, is just short covering, profit taking, and as we got into the cloud, it just proved to be a great spot to get short or add to a short. As we got into the open, we saw resistance around 1929. Let's just call it 1930. We failed right here, smacked down into the trend line, failed here, smacked down into the trend line, and then failed again over here into the cloud. After these two failures, once we got here into the cloud, that's two reasons to consider that as resistance. I had a nice triple top here. You could call this a sort of an ascending triangle, which is usually bullish, but given that this is just short covering and we're in the cloud is bearish. This was just the best spot to get short, in my opinion, for the day. And if you missed that, the cloud gave you several chances to get back in. Well, the bulls did have some hope. We did pop up right here. We didn't last too long, though. As soon as we got back onto the cloud, we tested the cloud again, and the cloud just nailed this to within a tick of being the top of this move, and that was another golden opportunity to get short. So here, before we just collapsed and retested the overnight low. We actually broke the overnight low, and just by a point though. And coming into today, the bulls had two things working for them. We're coming off of 3 straight down days, and very, very rarely do you get 4 straight down days. Now we closed barely up. I think, just a point, a couple points, I think. So the bulls ended up winning the day technically, but this controlled buying into the open and just being met by the cloud with resistance. There's no reason to jump the gun and be like, oh, okay, well, 3 straight down days, let me just get long on the open, because you would have gotten crushed and you would still be down. So you have to play the chart. Although it is good to have sort of a fundamental reasoning to maybe go against the trend, but price action has to confirm that thesis before you can just jump in to a trade. There's no reason to get long right here as you're about to come into resistance. No reason to even get short here because you're not into the cloud yet. So once you got here, you had a nice risk-reward trade. You risk, give yourself a tick or two above the cloud, and just write it out, and you would have made, let's see, 1929. Make your first target maybe the Kijinsen. Although if you got to here, 16 points, that's an awesome trade. So especially right off the open, you could have been done for the day. But if you missed that opportunity, you had another opportunity here. And then once this kind of happened, you would wait for it to get back into the cloud before you start trying to get short. Tomorrow is Tuesday. And there's also actually another thing that the bulls had going for them is that turnaround Tuesday, which has worked for the past 3 weeks. Although last week's was extremely weak turnaround, but we did have a green Tuesday, if I'm remembering correctly. And the bounce did start midday into the afternoon of last week also. And I've been saying this in the chat room for the past few weeks now because it'll happen midday, put in the low, and it'll start turning around up into Tuesday. So Tuesday, we may see somewhat of a green day. but there are a lot of reasons why it either will or won't, and we'll kind of get into that. It's interesting that we closed green today because China, I think they closed down 5 or 6%, and we were just mildly, we closed green, so that's interesting. And right now it's 10 o'clock Central, and I believe the last numbers I saw was that China is up slightly. So maybe China is kind of playing off our market. We'll see. We'll have to see how the rest of the week plays out as far as that correlation between our markets and China's markets. So I'm not going to jump the gun and say that they're following our markets now, but it's just interesting to see. Maybe we see a little bit of a difference in that relationship. So this week is options expiration. Usually what that means, well, the day with the highest probability of putting in the low for the week, I think it has like a 60-70% probability of being the low, putting in the low for the week is Monday. So this 1892, 1893 area, that'll be key moving forward, seeing as it is options expiration, and they do like to mark up the market into the expiration. So another thing bulls have going for them at this point, they're looking for anything that they can after being just destroyed. This is the daily chart. So still very oversold, starting to curl up a little bit on the RSI. And I'll start drawing some levels just based off of the August correction. So we found a lot of support around here, and we found support here. So we can go ahead and mark this as an area to look at, not necessarily an exact number, but around here would be a point where we can find support, and we have found support. So it's just an area to keep in mind. We can go ahead and I guess mark this this area right here, and obviously down there. Mark that. Not the prettiest, but we're going into territory we haven't seen since August, September, October really. So that's just something to keep in mind. If we go to a weekly chart, we can see that we are in the cloud. Let me go ahead and get rid of these. We're in the cloud. We actually bounced off the top of the cloud. Our future is still bullish. If 1811 goes, let's see 1811 here. That was the low there. Is 1831. If these two levels start going, that will symbolize that we're coming up against the bottom of the cloud on a weekly chart. If this, keep in mind, this weekly chart has been bullish since the beginning of this bull market, and this support hasn't been tested until this year. So if we start breaking 1831, 1811, and then we test the bottom of this cloud, then if we break this cloud, we're guaranteed that we're in a long-term bear market, in my opinion. And with interest rates, low oil, deleveraging of several markets, and just it kind of makes sense. And maybe a slow death. It might not be the sort of panic we're used to yet, but like I've been saying kind of all year in various chat rooms, I guess, is that the cracks are starting to show. So just something to keep in mind. I'm not saying be gloom and doom just yet. Technically, we are still in a range, but bull markets thrive on low volatility, and we're even very volatile the past 4 or 5 months now. So the longer the volatility stays, the less chance you have of a bull market maintaining itself. So from the daily cloud perspective, any bounce would actually make sense, because what you expect when the cloud is broken is for the cloud to be tested, and that's your best opportunity to get either short if you're coming from underneath the cloud, or long if you're coming from above the cloud. And that's actually something we saw towards the end of the day today. This is the 2500 tick chart. We started sort of our turnaround Tuesday move that we would kind of expect right here. Broke up through the cloud. You would not get long right here. You could, but you want confirmation that this cloud is going to act as support. So you break through, it's a change of trend, you go from a bearish to bullish trend, and you would wait for price to come down and test this cloud, and it tested it to the tick, actually, like exactly tested it right here on this candle. And you could have gotten long if you were the most patient man in the world and you wanted to get the perfect trade. You could have gotten long at the very bottom of this cloud. Now, I don't recommend that because very rarely does that happen. I mean, give yourself at least a couple ticks, and then give yourself a couple ticks stop loss outside the cloud, or a point, just depending on what you're comfortable with. The tighter, the better, obviously. But this confirmation, you could have waited till this candle already happened, and then once it got to this candle, you could have seen, okay, this acted as support, so now I have the confirmation to get into this trade, and then you can still use the same stop loss, and then you would have gotten a good trade out of that if you're trading futures after hours. So it's good to see both sides. If you see this controlled buying after a big move down, as we've seen in the past, last week and today, it's just short covering, in my opinion, and that's how I see it. So I don't see that as a necessarily bullish sign. I mean, if you're up, 80, 90 points on a contract, or even 50 or 40, why wouldn't you take profits, and then retest some resistance levels and then just get re-short, because the environment hasn't changed at all. So big money is just trapping some bulls here. Why not? Because they can. And they ended up just taking profits again, and then we'll see how we go towards the end of the week, towards the Friday expiration. So I kind of want to give some scenarios, some different possibilities if either bulls or bears win this sort of choppy day we had. So what we have had before is we've had a break through the cloud, and then we've had chop, and that's kind of what this reminds me of. Although we did find support at the cloud, but it does resemble it, at least a little bit to me. So just based off of this chart, we found resistance at 1930, and we found support there previously. So 1930 is an important area for me. It was important coming into today, obviously, because of the cloud, but we can see that this has just been, support, 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 and now triple topped right there. So that's an interesting area. Right here we had this session high that was the previous session low at 1970, and so looking at that area as a potential upside target. And then let's see what else we can do off this chart. Kind of had some resistance here at 2013, maybe throw that on there. And then let's kind of zoom out and see where we stand. So we have 1930, 1970, 2013. And price still, and this is the 1 hour cloud, 1 hour chart for ES. We haven't conquered this Kijun-sen yet. So for the bulls to really have a case, in my opinion, for a real significant sort of bounce or real turnaround, aside from a little, 0.5% turnaround Tuesday like we had last week or something like that, we're gonna have to get past this 1 hour Kijun-sen. Now that is represented by 1928.63. Let's just call it 1928. And so it's 1928 to 1930 area, just based off of price action, and now based off of the 1 hour Kijun-sen, which has been respected the past week. You can see that's an important area for bulls to take. And then if that goes, we can start talking about 1970, which kind of coincides with this cloud. Tomorrow's open will be over here, so if this Kijun-sen goes, then we would start talking about the 1 hour cloud coming into play. And based on previous price action, we could, sort of work on an area we would look to be getting possibly short, or kind of just wait and see what happens. And if we zoom out even further, here's the 4 hour cloud. We haven't even flirted with the Tenkan-sen in a while. So the Tenkan-sen on the 4-hour is right at 1930, so that works out perfectly. I didn't look at this prior to. I'm just doing this right now, just to kind of show you guys the process. And the 4-hour Kijun-sen comes in at 1983. Let's call it. So that would be the next target after next significant price after 1970 at least. And then we're so far away from the cloud that I wouldn't even talk about the 4-hour cloud yet, because it can lag a little bit. The 1-hour kind of keeps up better in the short term. So if we go to the daily, we can see that 1970, 1983, and wow, and 2013 actually lines up perfectly at the top of the cloud. So that's kind of crazy how it works out perfectly like that. So key levels moving forward. Obviously, the daily Kijun-sen, which right now is 1997. So we could throw that in there if we want to, but it's not really, it hasn't really been there a while. So we'll keep it in mind, but I probably won't mark it on my chart. And there's something interesting I just noticed. Let me hide all these price levels. You can go back and see it if you want. We do have a chart pattern here that I usually see on tick charts. I'll give you guys a couple seconds to see if you can see it. Alright. Here we go. We have a spike down. You probably could have guessed this. At least I hope. I'll try to make it prettier. There we go. Spike down. And guess what comes next? Channel. So we do have a spike and channel. We have 2 touches, 3 kind of, and we have 2 touches, almost 3. So that is a channel. Now, what would we expect moving forward if this breaks? Yes, this does work on time-based charts. It doesn't just work on tick-based charts. Based on the spike and channel, we would expect if we break to the upside, we would expect a breakout and then a retest, and then we would expect to retest, or a full rotation would involve retesting where the spike and channel first met its resistance in the opposite direction. So that would come right around here, and that would be, let's call it 2018. So we expect, if we break, and this is an if, this isn't materializing right now or anything, but this is actually a really long-term spike and channel on the 4-hour. So if we break, we expect a retest. It doesn't always work out perfectly. Nothing ever does, or nothing always does at least. Breakout, retest, and then seek out those price levels we mentioned, but a full rotation of the spike and channel would involve retesting these levels up here. Let's call it 2015 to 2018. Before, and a confirmation after the full rotation would be to be rejected, maybe bounce and then get rejected, or we break out, bounce off this cloud, break out here, bounce off this cloud, and just possibilities, guys. I'm not trying to say this is exactly what's going to happen, one of these two things, but based on this pattern, this is something we would kind of want to keep in mind. Let's get rid of all these. So, thought that was interesting. So for the bulls, you have your upside targets. A retracement of this daily cloud would be healthy for bears, because once you break through a cloud, you do want to see a retest to confirm this as resistance. As you can see, this broke through, never really retested the cloud until we got here, and just failed as support. So these retests on the daily cloud, or any cloud really, are significant, and we would kind of expect one. I mean, it's just crazy. We just had these 2 weak bounces. This was on Tuesday, I believe, but you can see this long bottom wick that the turnaround started, and I remember this turnaround started I think midday, early afternoon. and then we bounced up here, and then you just close with a weak positive. But if you consider that we bounced from all the way down here, it was actually a pretty good bounce. And this is a pretty decent bounce so far. I think we're like 20 points off the low. Yeah, so not bad. But first and foremost, the bulls need to hold the 2500 tick chart, then take the 1 hour Kijun-sen, and then challenge the 1 hour cloud, retake these previous support resistance levels that we've seen the past week, and then we can start talking about, maybe we retest up here. But anything is possible, guys. We could just get crushed. If China stays green, we'll see how the market reacts to that. It is options expiration, so you would expect price to be marked up towards the end of the week, and the low has a high probability of coming in on Monday. So downside targets, obviously this little support area, right? This little support area we saw, and this whole area down here, 1811, 1831, etc. This whole mess down here that was tested in a matter of a couple months. So those are my thoughts for this week, guys. I probably won't make a video for every single day unless I see something interesting. To me, the fact that this is still happening, this controlled buying, that was interesting enough to me, and the fact that the cloud just came into a dime, came in on the dime, right here and right here, to the bear side and then to the bullish side. It was interesting to me. So, and I also wanted to point out the MOC order. It was 700 million to the buy side. And now I always say that if it's not a billion, I just ignore it. It's not significant to me. And today kind of confirmed that. Let's see where 345 is, right around here. This is 700 million to the buy, and we went down. So, like I said, if it's not a billion, I don't think it's significant, and I'm pretty sure other people don't think it's significant either. So, just something to keep in mind too. The cloud, MOC, these price levels I pointed out, the 4 hour spike in channel. So, I hope all that made sense. Let's try to do a quick video this time. If I don't see you before the end of the weekend, then the next video on ES will be a week recap. So we'll see how options expiration goes, see how the rest of the week goes, and good luck to you guys and girls out there.